Very good morning to all attending this webinar today. Thank you so much for joining us today morning. Uh, my name is Sudarshan and I will be taking you through today's webinar. Going straight in, uh, we will look at the global macroeconomy, how it has performed over the last month, and a special look at how the US elections have impacted the global economy as such. We will look at India and a feature unique to India over the last week, which was the denomination correction, where the government of India had withdrawn the 1,000 rupee and 500 rupee notes. Post this, we will arrive at our investment strategy. Now, going straight in, we will look at the euro area. The GDP in the euro area has grown at 0.3% quarter on quarter. Now, this is in line with the initial forecast for the entire euro area. Growth in Europe, in the European Union, has been driven primarily by Germany. If you look at the composite PMI, the euro area's composite PMI stood at 53.3, whereas Germany was at 55.1. The inflation for the euro area was at 0.5%, against an initial forecast of 1.6%. Now, the euro area is forecasted to grow by about 1.6% through 2016. And there is quite a lot of strong underlying macro supporting this. For example, in the month of October, Germany recorded new businesses, and the new businesses were at a 6-month high. And also in October, there was the steepest accumulation of backlogs. And backlogs are a good proxy of how much work or capacity that the economy will be producing as an output over the coming months. There's a strong demand for new goods, there's a strong demand for new services, and at the moment there is also a capacity constraint. So what this means is that more jobs will be created in the euro area, which will help support the 1.6% growth for the European Union. However, this GDP is projected to grow by only 1.4% in the next year. Moving to Japan. Japan's GDP is estimated to be at about 0.9% for the previous quarter. However, the actual reading of the GDP will only be seen on 14th November. Japan's central bank, the Bank of Japan, is trying to target a 2% growth in its inflation. However, due to low average family consumption, the inflation now is at a negative 0.5%. So Japan is once again back to its deflationary stages. But the business sentiment in Japan was really good in the previous month. In fact, the business sentiment was the strongest for over 6 months in the month of October. There's been a strong expansion in business orders, the highest expansion since February, in fact. New orders and backlogs are increasing. And like the European Union, more jobs are being added. Japan saw the fastest job addition in 9 months. Manufacturing alone saw its highest job addition in almost 30 months. And manufacturing is expanding at a pretty good rate, which is the fastest it has seen since December 2015. Now, with all of this job addition, unemployment rate is down at about 3%, which is the lowest it's been in almost 3 decades. It's no surprise that the manufacturing PMI is also at 51.4, indicating that there is a good expansion activity in manufacturing. Moving to the United States, consumption activity is up, and this consumption activity alone is driving the US economy as it always has. The GDP for the previous quarter, that is a quarter that ended in September, was at 2.9%. It was initially forecasted to be at about 2.6%. Inflation is at an annualized rate of 2.2%. However, we look at more of the actual inflation, which we prefer to be at about 2%. Composite PMI is also up. It's at about 54.9. Once again, this indicates that the business sentiment is up in October. Manufacturing PMI stood at 55.5, the highest it's ever seen since in almost 12 months. Services activity is also up at about 54.8. 161,000 jobs were added in October. Unemployment rate is down. Wage growth has happened, and the GDP is forecasted to grow at about 3.1% in the present quarter. Overall, US is expected to expand by 2% in this year. Now, all of this seems quite a rosy picture of sorts, because the consumption activity is up. The USA has also a much bigger trade imports, and this is why we can also see that the activities in Asia Pacific, which is primarily dominated by China. The world economy at the moment is primarily dominated by just two economies. One is the United States, the other is China. China manufactures goods and sells to the United States. Every other economy sells its commodities to China, or it sells its services to the USA. So if USA performs well, so does the rest of the world. Which is why the GDP of China was at 6.7% in the previous quarter. Now, there is a bit of a uneasiness in China's growth, primarily because it's fueled a lot by growth, and China's core debt is about 250% of its GDP. Now, this is very comparable to what Japan was in the 1990s. The Chinese inflation, primarily the consumer price index, stood at about 2.1%, whereas the producer price index, which is the input for the manufacturers, is at about 0.1%. And now this was in a period of deflation for almost 3 years. Now, the reason for the recent rise in the producer price index is because commodities have become better. Until about 2 months ago, they were in a free fall of sorts. Then countries like Chile, Philippines had put a stop on how much on their mineral outputs. Now, putting this stop has raised the commodity prices, which in turn is reflected in China's PPI. But if you look at the rest of the Asia Pacific, which primarily is ASEAN, the Southeast Asian nations, the manufacturing activity is actually contracting. It stands at about 49.2 for the month of October. This is primarily because even though there is growth in China, China also has an overcapacity, so it can actually help itself while at the same time exporting to the rest of the world. Singapore has been a sort of a surprise in the Southeast Asian nations as such. Its GDP shrank by about 4.1%. The Bank of Singapore does not foresee a positive business outlook for Singapore assets. So there might be a big setback economically in the Southeast Asian nations through the form of Singapore. In other nations in the Southeast Asia, we had Indonesia, whose GDP expanded by about 5.02%, while it was projected to grow at 5.04%. Besides this, there is Malaysia, the third largest economy in the southeast. Malaysia's GDP grew by 4.4%. Now this is interesting because, well, oil prices are low, and Malaysia primarily depends on oil for its economy. Now, with oil prices low, the government spending also goes low. But still, the Malaysian GDP expanded because consumption's gone up, and private sector activity has also gone up. Now, looking at Latin America, Mexico's Q3 GDP expanded by 2%. Now, in the previous quarter, it shrank by about 1.4%. Now, Mexico was initially forecasted to grow at 1.9%, and it's beaten expectations, which is good. Latin America, as such, experiences chronic inflation. Brazil's inflation is as high as about 11%, and Colombia was also at about 11%. However, Colombia has is about 11 months of consistently increasing rates of interest marked by its central bank. Now, this has helped Colombia bring down its inflation from 7.25% in September to 6.48% in October. Now, the most stable economy of sorts in Latin America is Chile. Now, Chile's business activity has picked up by about 0.4% uh, in October compared to what it was in September 2016. But the biggest economy of Latin America, which is Brazil, still continues to be in recession. And with Brazil being in recession, it's a threat for the rest of the Latin American economies. Now, Brazil's actual composite PMI was 44.9, while it was forecasted to be 46.1, which means Brazil's business activity was expected to shrink in October, but it shrank much faster than expected. So Brazil is still quite in deep problems. Now let's look at the commodity markets. Now oil prices had rallied in the first half of October. It had from about 47 dollars per barrel to a high of about 51 to 50, 51, $52 per barrel on 19th October. But since then, oil prices have fallen. OPEC, which are the Organization of Petroleum Exporting Countries, it's a group of about 13 countries which export petroleum. Now, this group is not, it does not include all the oil-producing economies. For example, Norway, Russia are not part of OPEC, but they are major oil producers, as is the United States. However, OPEC does have quite a strong ability to control the oil prices. As of now, with political tensions of sorts in the Middle East, especially with Iran and Saudi Arabia at odds with each other, they continue to overproduce. And with this overproduction, oil oil prices can't be seen to rise. However, they did reach a deal of sorts in September to cut down oil production. This deal, however, has to be ratified by all the OPEC members. Now, unless it's ratified and complied with, oil prices will continue to remain range bound as where it is now. Now this is beneficial to the non-OPEC members like Russia, who have decided to ramp up their oil production assets so that their finances are not hit. Now, gold has been on a low of sorts since October. In October 4th, it had reached at a low of about $1271 per ounce. This is the lowest it has been since June 23rd. Now, When we spoke about the United States' manufacturing economy, United States' economy as such, we had seen a lot of positive growth. Now, with this positive growth, it means that the United States is actually investors see it as a much safer bet than gold. They expect returns from it, so they invest a lot more in the United States, thereby boosting up the dollar. Now, if the dollar is boosted, uh, gold prices go down, as do the other commodity prices, namely oil. Now, the Federal Reserve was also supposed to, uh, uh, the Federal Reserve was in discussions to whether rise or to keep the interest rates uh, keep the interest rates steady. Now, the outcome of that was in November 2nd, they had decided to keep the interest rates steady, meaning they don't really see, they need a lot more robust data to prove that the United States is expanding. So, with the holding of the interest rates, the dollar weakened. And with the weakening of the dollar at that particular point, gold prices increased. Now, as we had discussed in the Chinese economy, uh, the, where we had mentioned that the producers price index, which is the input costs for businesses, that had gone up, and this is primarily because of the uh, cutting down of the mineral output. Uh, China had placed a cap on its coal production about 3 months ago. Now, with demand picking up and the availability of coal going down, coal prices have seen a rally, and they are at about a 5-year high. But there are other contributions to this particular uh, rally, which is basically a supply side disruption. Now, once these disruptions do settle down, we expect the coal prices to come back down to about $90 to $100 and stay in that range for a while. Now, Philippines had, under its rather radical president, Rodrigo Duterte, had put a cap on its nickel production. Now, there were other economies that also put a cap on their mineral output, which is why we see a rally of these industrial metals. For example, tin had rallied to $20,500 per ton. This is the highest level it's seen since 2014. Now, uh, most of these, data were picked up in October. In October, most of the businesses, Wall Street, had all predicted that Hillary Clinton would win. So most of these, data would be pretty compliant with, Wall Street's expectation of a Hillary Clinton's win. Which means if Clinton had won, they would have, the policy of the United States would have pretty much continued. Now, when there was evidence that Hillary Clinton was losing the race, uh, there were really downside negative sentiments in the market. For example, October 28th, stocks fell down because the FBI decided to reopen the case against Clinton on the email scandal. Consequently, the polls figured that the polls gave a news that Donald Trump might be up ahead, and this resulted in the global markets showing an early stage of panic. And then the FBI decides to clear Clinton of uh, all her wrong, clear her of the email scandal as such, and the Dow Jones rises up by 371 points. And after that, we see that the markets are much more, you know, uh, trading, taking decisions, assuming that Clinton's going to win. For example, dollar remained steady because Clinton, no, Hillary Clinton was expected to become president. The Asian markets also rose up because Clinton was expected to become president. But then Mr. Trump won, and then you know uh, lots of indices fell across the world. All uh, the Standard and Poor Index, Dow Jones, Nasdaq all fell by about 4 to 5%. Nikkei fell. South Korea's Kospi fell. Hang Seng fell, including India. India wasn't spared as well. India fell. Uh, the Nifty and Sensex both fell. In the Europe, in Europe, FTSE, which is London Stock Exchange, fell. DAX, Germany's exchange fell, and all the pan-European stocks have also fell. Now, the immediate aftermath of the elections was there was a much more there was higher buying of much more stabler economies, uh, namely the developed economies, that is the Japan and uh, the European Union, and there was selling off of the much more riskier currencies, primarily the emerging markets. So the Mexican peso, which has the Mexico has about 20 or to 25% of its exports, primarily to the U.S. Now, with Donald Trump become president, there is a big chance that Mexico will fall into recession. So, Mexican peso fell by 13.4%. That's the biggest fall it's experienced, and it reached an 8-year low. The Brazilian real that also weakened by about 2%. Korea, which is also an export-driven economy, that fell 2.5%. Yuan, as we had spoken earlier, China's currency and China exports primarily to the US, that also fell. And the developed economies, developed and perceived stable economies specifically, like Japan, the yen rallied about 3.6%. It almost breached the 100 mark. The euro also rose by about 1.3% against the dollar. But the pound fell because the British economy, even though it is developed, is not perceived to be stable at the moment. Now, if you had joined us on our webinar on 9th November, we had discussed how the price of gold would rise and how the developed economies' currency would rise, whereas the sale of the uh, emerging economies currencies would happen, and that pretty much did happen on that particular day, because on that day, what happened was pretty much a knee-jerk reaction. If you look at the price of a US dollar compared to euro, it had gone as high as 1.126, $128 equals €1, and gold had also breached the 1,300 mark once again. But if we just remove that particular day alone, we see that there is, the trend which was existing before was continuing after that. So what does this mean? It means that particular days was just a knee-jerk reaction. That's it. The data of U.S. economies, a good performance in October meant that the dollar would strengthen against most of the currencies. That continues in the euro, that continued in the yen as well. And because of the strengthening of the dollar, the gold prices will drop, and that is also being observed. So the markets, as such, were expecting Clinton's win, but they got a Trump's win. But the underlying macros were pretty much, were indicative of what was going to happen, irrespective of the elections. Now, moving on to India. Uh, Now, the inflation in October is expected to have been about 4.1%. The official figures are not out yet. Now, 4.31% was inflation in September 2016, which shows an improvement, because the RBI wants to keep the inflation at about 4% by 2021. Manufacturing activity picked up. We saw 54.4 as a manufacturing activity PMI in October compared to September. The composite PMI as such has picked up as a whole. Now, this once again is because of the rather positive business sentiment that was taking place in October. Now, um, on November 8th, 2016, uh, the Prime Minister of India announced that the 500 and 1000 rupee notes would be demonetized. And the new currency of 500 and new currency of 2000 rupees would be introduced. Now, this is a move to fight black money. And well, because of this, we saw uh, what we expect is the real estate transactions will go down. A large, about 80% of the transactions in real estate take place in cash. And well, with the demonetization of 500,000 rupee notes, we expect that the amount of transactions taking place will drop. Now, with this drop in the transactions, we expect that the price of real estates will actually fall. Well, more for about a couple of quarters. Uh, Similarly, the price of jewelry, which is jewelry also, which is uh, you know uh, the transactions take place primarily in cash. The jewelry an interesting phenomena that happened during the demonetization was that jewelers were charging a premium for taking in old cash. Um, This, however, drove the prices of gold briefly, only in India, but it's not going to have a lasting impact. Now, with the sudden introduction of this a new 500 and 2000 rupee notes, there will be a temporary liquidity crunch. For example, there are still remote locations where banks are not as uh, uh, you know accessible, but the transactions still take place in 500s and 1000 rupee notes. Now, with the sudden demonetization of this, we expect that the daily consumptions will get hit. So there will be a brief drop in the daily consumption, but this will only be a temporary activity because we expect that in the longer run, the consumption activity will pick up. We will see more cashless transactions happening, and with more cashless transactions, we will see an increased transparency. And with the increased transparency, it is going to greatly aid our ease of doing business in India. So we expect investment will pick up. We expect businesses will be much more efficient in the transactions. Uh, as a whole, this move, as such, is much a good boost to the Indian economy as such. Now, with this transparency also comes a boost in the boost to the government earnings. With the government earnings picking up, naturally, the next step was to buy a lot of the government bonds. So we see that the yield rates, which is inverse of the the government's bond rates, is actually 6.45%, a drop of 15 basis points. This is a very big uh, boost to the bond prices as such. Uh, if you look at the other emerging economies, we see that the bond yield rates have actually fallen by 30 basis points due to the uh, uh, Donald Trump becoming voted as the next president of the United States. All of these indicate that India will continue to be a bright spot in the coming times. Now, looking at the impact of the US elections on India, we see that the rupee has weakened to about 67 rupees to the dollar. Now, this is in line with what we had expected of the emerging market currencies to weaken against the US dollar. Now, one possible consequence of Trump becoming president is, um, well, one of his policies is to onshore jobs, meaning uh, lesser imports from China. And with lesser imports, meaning lesser investments. With lesser investments, we expect that the Chinese real estate, which is currently a bubble at the moment, might burst. And if that happens, um, well, US will weaken, and so will China, and consequently the rest of the world. India will also get impacted, but the Indian economy is still more uh, self-driven rather than completely globalized. There is still a bit of a closed nature to the Indian economy compared to the rest of the world. So the impact of the world slowing down will impact India, but not to a great extent compared to the rest to the much more open market economies. Now, with the weakening of the rupee is a consequence of the flight of the dollar, flight of investments from India. Now, flight of capital will temporarily result in negative balance of payments, and it will increase the current account deficit. Um, so, rupee will weaken a bit more in the near term, and because Donald Trump has been voted to the uh, voted as the next president but has not yet assumed office, there remains a policy uncertainty. Uh, as in, we are not particularly sure what his next steps will be and how it will hamper the markets as such. Now we expect this volatility to continue till Jan 2017. Now it is because of volatility that some of you may have noticed. Uh, some of the stocks, despite performing, despite their balance sheet looking good, despite their futures looking good, they saw a fall in the prices. For example, a few companies in the automobile industry, they had recorded profits not seen since December, uh, not seen in many quarters as such. Now, despite reporting such a big rise in profit, their prices crashed because of an induced volatility. And this volatility will continue for the next couple of months until there is much more clarity in what steps will be taken by Mr. Donald Trump. Moving to our investment strategy, as we had discussed, equity markets will continue to be volatile. As we had seen in the previous slide, there was a 1.3% drop in the Nifty on when the results were announced. But the very next day, uh, uh, Nifty had gained 1.1%. Uh, this volatility will continue to until Trump assumes office in Jan 2017. Now, at this point, it must be strongly noted. It is not good to time the markets. It is much more prudent for you to invest in a systematic manner, so that a systematic investment takes care of the volatility or that the markets continue that is experiencing at the moment. On the day of the elections, gold uh, zoomed by about 3.5%, and then it fell. But we expect that the gold will continue to, boost in the coming future because, as we had discussed, there is a likelihood of a crisis in the Southeast Asia. Emerging markets are going to be a bit hit, in which case there will be much more investments in gold. European Union is also currently experiencing a wave of populism. The same populism that had caused Brexit, the same populism that had helped Donald Trump become president is sweeping the rest of the European Union. There is Germany and France and Netherlands who are all going into elections in the coming months. So there is going to be a bit of uncertainty in the European Union as well. So we expect the gold prices will go up once again during that time period. Now, as we had discussed, under the impact of the 500,000 rupee notes, the move to demonetize will boost government earnings. So, with the rise in government earnings, there will be stronger demand for bond. So, having bond in a portfolio is going to be beneficial. Now, with that, we come to the end of our webinar. Thank you very much for your participation. We are now open to questions.